Hello and welcome to KYC. I am Sharad Dubey and with me is Anushi Vakaria, and today the company in focus would be your IRB Infra. Of course, stock has been buzzing on the face of its Q2 earnings as well as its important order win. But there are certain questions which we need to ask at why this company is there in KYC. Right. The first question, of course, Anushi, is decoding their deal. That's around roughly almost 10,000 crore, you could say. Order win for NHAI. Now, how much does it actually boost its assets overall in its InvIT? That will also something which you'll be looking out for. Another important reason for IRB in focus being is NHAI ordering. Will that pick up after a muted H1, let's say? Will this actually pick up, especially in various projects, right?
And this has been going on for a couple of quarters, you know, where NHAI awarding has been on the weaker side, which has impacted other infra players as well. So, very important question to ask.
Exactly. The numbers are also weak for the infra players. Third question is debt reduction and asset monetization. What's the strategy ahead? And for an infra heavy player, this makes sense. And they are having an InvIT also to give a perspective to our viewers that this is a way to do the debt reduction.
Right.
And of course, the last point, the main question is, will this momentum of strong collection continue? It has been a single-digit growth, but decent overall if you look at the last 3 to 5 odd years. But Anushi, let's just break the business model. What's the company all about?
Of course. So, if we talk about IRB Infra, it's one of the prominent names that we are seeing in the infrastructure space. It's a developer in the road and highway segment particularly. While the total kilometers of land, it has an asset base of over 80,000 crore. This is across pan-India that we are seeing its presence, currently about 12 states or so. And this covers about 21 years of weighted average residual concession life if we take all of its projects in consideration. With them having about a 10% of a market share of pan-India when it comes to the overall toll revenue picture which is there. Now, you know, with this addition of the 9,200 crore plus of the project that we're seeing, their market share in the TOT segments, that is increased to about 42% with this itself.
So, Anushi, this is the recent order which you're talking about,
yes,
right?
This is
so
just
this
the
becomes
one.
very massive, 42%.
This becomes absolutely massive, considering that they had about, if I'm not mistaken, about a 30%, 33% or also market share before in this particular segment. So an important development for the company in this regards. But other than that also, if you just look at its operations, it's into construction, tolling, operating, maintaining 19,000 lane kilometers pan India. Now this includes about 18 BOT projects. Along with that, this includes 5 TOT projects. BOT is build, operate and transfer. TOT is toll, operate and transfer, and 4 HAM projects. That's hybrid annuity model.
Yes.
Exactly. So its presence is across these 3 that we are looking at. Of course, BOT and TOT would take precedence now with a huge pipeline of opportunity which is there, roughly at the size of 55,000 crore or so, which is expected to start from this December itself. But apart from that, if you look at its key segment also, in terms of how they've distributed their overall total lane kilometer, the parent company currently handles about 2,456 of lane kilometer, but it's the InvITs wherein the focus is now there. Private InvITs up to 10,567 kilometer. A majority of chunk is what we are seeing in this particular regard, and public InvIT about 2,400 crore.
Yes, and it's pretty interesting for our viewers that if you are wondering why this number is so high. So basically in a private InvIT, generally what happens is asset monetization happens and this gets packaged and it's sold to larger players, the PEs and the VCs. Right. So that's why you're seeing that this number is looking very high.
Right. So considering all of these projects which are there, if you take that total order book in consideration, that roughly stands at about 32,000 kilometer or so. And this is a kind of growth that we've seen from 2016 to 2025. Almost double the value is what we are seeing in terms of where the presence has been. So this brings the total order book to about 32,000 crore. This includes O&M, that's about 32,500 crore, operation and maintenance. It's with operation and maintenance, they have a annuity check in terms of this income coming in years particular, while if you look at the EPC side of it, about 1,500 crore is the kind of contribution that we are seeing. So this is essentially how the company's business model operates.
Well, that's a pretty interesting one, Anushi, but let's get back to our format of our show. How do we give the ratings? What are the parameters for KYC? And first and foremost is we take in the income statement, balance sheet, cash flow. These are the 3 holy grail for financial statements. Of course, return ratios are very important. If you're an investor, why should you invest in this stock? Includes shareholding, street cred, which is nothing but the stock movement for short-term, medium-term and long-term investors, and valuation. That's very important when we compare them with peers. And last but not the least is the outlook going ahead. Based on that, we give the numbers. But Anushi, let's start with income statement. What are you gathering?
So in terms of income statement, if you are seeing, considering how the stock has done over the last 3 fiscals, we are looking at an average growth of about 9%. This is the compounded annual growth that we are seeing. So this is with regards to about 3% growth in FY25, which had been more on the muted side, considering the order book, which is also in picture. But in terms of margins and net profit, a higher growth trajectory is what we are looking at. About 23% plus of our profit CAGR, and with this addition of new asset coming in place now, that was going to aid their O&M income as well as we speak forward. So in the Q2 also, if you look at the numbers, they reported about a 10% of a revenue growth, while margins inched upwards to 53%, while net profits are about a 41%. So overall, considering the 3-year trajectory and how the first half has panned out, we've given this a thumbs up.
Well, that's pretty interesting, but balance sheet numbers also, Anushi, we checked the numbers and we added the H1 FY26 numbers as well. There is a lot of strength coming in. Look at the borrowing, that has come down for H1 FY26, and that's a very major positive thing when you look at an infra company. Also, overall, look at the cash and bank balance, that has actually come down from 3,446 crore to almost 1,366 crore rupees, but the H1 numbers overall has been strong. If you judge a balance sheet, and overall, it's a thumbs up from my side.
Right. If you are looking at the cash flow now, cash flow from operations, we are looking at a fluctuation in terms of your 24-25 figures with regards to operating cash flows which are there. And this is on account of receivables that we are seeing while there's this fluctuation figure that we are seeing. Of course, with a lot of these infrastructure companies with higher government contribution as well, there had been issues regarding to their payments and about their payments which were made, which impacted their receivables. But the trajectory forward is something that we'll see. But considering the overall net cash flow of FY25, that was on the positive side compared to FY24. So considering this, we've given it a neutral rating.
Well, that's pretty interesting on that, but return ratios is what matters, Anushi. When an investor comes in, what's the ROC, what's the ROE? These are ratios called return on capital employed, return on equity, not much to offer. If you don't get something between 15 to 20%, then of course there are concerns about it. And you see single digit numbers coming in for both ROC and ROE, nothing much to look at here. So it would be a thumbs down from my side.
Now, if you look at the shareholding pattern of the company, it's interesting how we are seeing that over the course of these last few years, it has majorly remained on the stable side. Promoters holding about 30% of stake in this last few quarters or so. This is a trend that we've been seeing from June 24 to September 25, while there was some dilution which happened between March 24 to June 24, but overall promoter holding has remained stable, while FIIs and DIIs mix also. DIIs have seen a pickup of around 2% from the last 2 quarters or so, while FIIs majorly in the range of 42 to 44% is what we are looking at. So consistent pattern is what we are looking at, given that we've given it a neutral rating for now.
Well, that's pretty interesting on that, but let's see the street trade, how the stock has actually performed. 1 month, it's been flat. 6 months, it's been on the negative side. It's down 16% odd. Year to date, it's down 25%. You see, the NHAI orderings have actually come down. And of course, execution also matters if you're coming from a monsoon-related season as well. See, the 5-year earning has been strong for 279% gains. But if it's a short-term or even a positional investor who has come in, we see there is nothing in for that investor. On that basis, I would be, kind of giving this entire rating right now currently. You could say a thumbs down coming in from here.
Sharad, if you look at the valuation picture now, so if you just take firstly the PE in consideration,
so for a big company, we take both, right? PE as well as EV.
Yeah, what we've done basically is that since they also have InvITs, they have a huge asset base as well. Along with that, even in terms of the monetization strategies which go on, we've also considered there's a lot of fluctuation in terms of debt structure which is there. We've considered both the price multiple as well as where the EV to EBITDA stands for both of these. So IRB, if you take it in account with the other three peers which are there, it's majorly in line as what we are seeing, about 18 times forward multiple over there. So nothing much to talk about it with that regards. Even if you look at the EV to EBITDA multiple, while we are looking at something like Ashok and Dilip Bilcon at relatively cheaper valuations, do note that their growth has also been on the muted side since these last couple of quarters. While for IRB and PNC, the mix is something between 10x to 14x. So given considering all of these, we've given this one a neutral rating.
Well, that's pretty interesting, but let's focus on the last but not the least, outlook, how the company's outlook has shaped up. And you look at it, they just got a 10,000 crore almost order coming from NHAI, and this is a long 20-year order. Now, what happens is ISB's trust portfolio, that's expected to increase 20% to almost 65,000 odd crore rupees. Toll collections are expected to remain strong. That's what the commentary has been coming in. But the most important project which the company is undertaking, that name is Ganga Expressway project. Their exposure, their timelines would be something which we'll be looking out for. And if that comes before the timelines, then it will be very important. Asset monetization, that's something which Anushi had mentioned earlier. That's a very important strategic outlook going ahead. So overall, net, the outlook remains strong. So I'll be giving a thumbs up for the company, and just because the pricing, the numbers have been coming down, so this makes it a compelling investment case when it comes to the valuation. But let's just revise the entire ratings, Anushi, which we have given for this company in our segment KYC. Income statement, balance sheet has been on strength. We have given a plus to both of them. Cash flow, largely neutral. It's an infra company, but return ratios, that is questionable, and that's why a thumbs down coming in. Shareholding neutral, street kid not much happening, valuations still attractive, but even Stevens, but the outlook, that remains solid, +1. So overall, we are giving the company 4.5 out of 8. It's net, you could say a neutral rating as per our average numbers.
Yeah, in fact, this is the rating that we've got, and considering the outlook for FY26 and this new project win also, we also spoke to the management. That's Anil Yadav, CEO, Business Development and Investment. I spoke to him firstly about the order win which was there of this 9,270 crore of project involving the Lucknow Ayodhya section. This is an important project that they've received. How that would enhance their overall portfolio, their overall share in TOT segment. Along with that, what's the kind of outlook that they're building with this addition and even the H1 picture in place? I had just a conversation with him, so do listen into that as well.
With respect to this is the TOT project which we have bagged. It is having a two section. One is from Lucknow to Ayodhya going up to Gorakhpur, and second is the part of stretch between Lucknow and Varanasi. So as you are aware that this is the religious places. So this corridor is covered by the various religious places in the state of UP.
So just want to understand, you had outlined about 55,000 crore worth of opportunities in the con call. Was this a part of this project? Are there any more such projects in progress that we are looking at? If you can give us perspective in terms of the order pipeline opportunity that you're seeing, where does this take your current order book at, and the subsequent increase in your O&M business as well as your market share?
I think before moving to the opportunity, I will just touch upon certain aspect of this order itself. So now this order is increasing our asset base from almost 80,000 crores to 90,000 crores plus. We are reaching closer to the 1 lakh crores mark in terms of the asset size. And this is expected to increase the toll revenue of the group by around 8 to 10%. And as our growth, if you look at the past quarters, the toll revenue growth was around 10 to 11%. We, after addition of this asset, we expect around 18 to 20% growth in terms of the overall toll revenue. And as you rightly mentioned, this has also increased our putting in the TOT space. We have 42% market share as far as TOT is concerned. And this project is we post the financial closure, post the payment of the payment to the NHAI. Project is expected to start by end of this financial year. So from next full financial year, revenue will be coming for the next full financial year. Now, in terms of the strategic location and the importance, because this covers the prominent tourist places in the UP, this has the strategic importance as well. Now, coming to the opportunities which you have discussed, we have around 25 to 30,000 crores kind of worth of TOT opportunity, which will get bidded out before end of the December. So this is the near-term opportunity which will be available, and we will be participating on that. Apart from that, there is almost 28 to 30,000 crores opportunity on the BOT side as well.
Right. So, Mr. Yadav, you just mentioned that this is expected to close by around this financial year. So, what's the kind of incremental growth that you see in terms of revenue by the addition of this project, and for what period of time as well?
So I think if you look at as it will probably start by end of the financial year. So from next financial year, we can look at the revenue growth coming from this asset will be in range of 8 to 10%. So since we typically the toll existing toll business will also grow in the range of 9 to 10%. With this addition, that the growth in the toll revenue for next financial year is expected to around 18 to 20%.
Okay, so 18 to 20% is the kind of growth that we expect from next year onwards. Understood. Now, coming to the second quarter results, you've reported a decent set of growth in terms of where the top line is concerned, 10% growth there. Margins have expanded to 53% versus 48%, while net profit also saw a significant uptick is what we are seeing. However, if you look at the construction business, that's about a 18% of a downtick. So just want to get your perspective in terms of FY26, if you have any targets in hand for the construction business, as well as your guidance for FY26, FY27, considering that, you know, while you have seen this particular big order win, the NHAI ordering has continued to remain muted, just like the last couple of quarters. So I want to get your understanding on all of these aspects.
Yeah, I think in terms of the second quarter, it was also impacted by the severe monsoon and extended monsoon. And secondly, if you look at the business for IRB, 85-90% business valuation comes from the asset business. With this asset addition of TOT 17, I think 90-95% will be coming from the asset business. We don't do any third party EPC. Largely our EPC is restricted to the O&M of the two InvIT which we have formed, and plus O&M of the IRB asset. And in terms of EPC, I think with respect to the O&M order book, we have order book of almost 30,000 plus kind of crores, which will be executed over the period of 10 to 12 years. So considering a good pipeline available for 10 to 12 years, and that is the steady state order book and also a stable margin. So going forward, definitely we will be eyeing for the BOT opportunity whenever viable project comes. But our largely focus will be on the asset business, which comes in form of TOT. And in terms of the EPC, it will be a gradually shift more towards the O&M side than the actual execution of the EPC job.
So just considering all of these aspects, what's the kind of number that you have in mind in terms of the top line growth, in terms of margins, where would that stand at?
So I think the asset business, since this quarter the EPC business was on a lower side, if you have seen a significant increase in the EBITDA margin by 500 to 600 basis point compared to the corresponding quarter of the last year. So asset business has 85-88% EBITDA margin. So as we will be shifting more revenue will be coming from the asset side, automatically there will be improvement in the EBITDA margin of the company. And as we will move closer to the year end for FY27, we can provide towards the end of towards the end of this financial year. Having said that, for toll business, that I have already discussed that with the current asset and the asset which we have bagged, the toll growth expected around 18 to 20%.
Okay, got it. So 18 to 20% is the number that we should be looking forward to. Now, coming to the order book, you know, you've given us an outlook in terms of the breakup between the kind of pipeline opportunity that is there between BOT and the TOT segments. Just want to also understand how execution of this 32,000 crore of existing order book is going to pan out for FY26 as well as FY27 as well. And along with that, what's the kind of outlook that you're building in terms of new orders which are there? If you can help with the timelines or so.
So I think in terms of the existing order book, roughly 4,500 crores is the executable order book for next 2 years. That it largely includes the O&M order book. And as we will back the new project, whether it's a TOT or BOT, there will be a order inflow which will be coming in. So I think that will be additionally contributing to the this EPC order book. And as I was discussing that we have roughly 5 to 6 TOT project which is up for bidding till December. We will be eyeing for those TOT project as well. And there is around 28 to 30,000 crores of BOT opportunity. We will be looking at on the basis of the viability. We will be bidding for those projects as well.
Also, looking at, you've talked about O&M, there's been a lot of emphasis from this segment as well. You're eyeing for 50% of a mix as well versus the current 25% to 30%, if I'm not wrong, if that's the correct number, which is there currently. So just want to understand between the O&M business and the EPC, which is there, how do margins differ across both of these?
So I think that is the very good question. In terms of the O&M, gradually we are from 8 to 10% kind of O&M execution, we have moved to around 25 to 30% kind of O&M execution. And we have aim in next couple of years, we'll be reaching almost 50-60% as a O&M execution. Good thing about O&M, apart from the healthy margin, O&M order book have a consistent visibility because typically the life of the project is around 20-25 years. So automatically you will have a visibility for 25-30 years in terms of the O&M order book. As against the EPC order book where you have only visibility for the 2 years, and if there is lower awarding in next 2 years, then automatically your EPC order book will vanish. So comparatively, O&M book has a healthy margin and also good visibility.
Okay, Mr. Yadav, let me also talk about the InvITs which are there. Just a quarter ago, we had discussed about the sale of the 3 SPVs which are there. This was from private InvIT to public InvIT that we'd seen, which released some capital as well. You also had a QIP launch of around 3,000 crore, which was later upsized as well. These are all, towards these BOT and TOT opportunities that we are seeing along with the debt picture as well. So just want to get an outlook in terms of the InvITs as well. What's the kind of asset monetization strategy that we are looking at, and how would that aid in financials in terms of where your debt structure is currently?
So I think if you look at IRB will be today lowest debt to equity ratio. We have net debt to equity 0.6:1. And the group always aims for that, not increasing the leverage position. And as you rightly mentioned, we have monetized 3 of the asset, and we have got a equity release of close to 5,000 crores. Now that equity release will be used for the upcoming opportunity. We have formulated one strategy, that is the bid, execute, stabilize and transfer. That is best strategy for the IRB. And on that basis, we will be bidding for the project, executing those, stabilizing. Once the revenue is stabilized, we will sell it to the public InvIT. And by that count, we will be freeing up the liquidity, and that liquidity will be used for the bid, will be used for as a growth capital for upcoming opportunity. So I think going forward, the focus will remain on that line itself, and we will be consistently monetizing the asset and growing our portfolio.
Okay, well, thank you so much,
And
Mr. Yadav. Yeah, please go ahead.
one thing to add, if you look at the 3 assets which we have transferred, was around 8,500 crores kind of EV. And the asset which we are adding is close to 10,000 crores kind of EV. And the 5,000 crores of equity which is released, that can take, with a 70-30 debt equity, that can take more than 15,000 crores worth of project in terms of the future opportunity available.
That's pretty interesting. The management are speaking about their key order wins and also their asset monetization plans. But during the entire show, Anushi, the KYC segment, let's just pick up all the 3 main takeaways which we have taken during our conversation. First one is, of course, the new order win. That's expected to increase the asset base size to 90,000 odd crore.
And eventually moving to 1 lakh crore as well, right?
Wow, that's a very big number coming in. Might be one of the largest players actually coming in. Also, they're expecting 18 to 20% growth in toll revenue with the new project addition. So that's a significant up move, right, for the toll collections, what we are seeing. Now, if this also comes in, That's a significant top line addition coming in.
Yeah,
And
it's
lastly,
a big project that we are seeing, about 9,200 crore size, and this is going to add revenues from next year onwards. About 8 to 10% is the kind of growth that they are seeing from just this one project itself. So even that is a big opportunity that they are getting from this.
that means
project.
it's going to be a waterfall year,
Yeah.
FY27. That's pretty interesting for IRB Infra, and that's why we had given the outlook also 1 and overall KYC rating at 4.5 out of 8. And this is it. Thank you very much for tuning on to KYC. Stay tuned to NDTV Profit.